Welcome everybody to another episode of the Black Wealth Renaissance Podcast. Your boy David BWR, 1/4 of the Black Wealth Renaissance, checking in with my co-hosts. Fellas, how y'all feeling?
What's up? It's your boy Jalen checking in. Feeling great on this lovely Saturday. What about y'all, fellas?
What's good, everybody? It's your boy Kelly checking in. Feeling great on this lovely Saturday. Got a lot of stuff coming up from BWR working on. What you doing over there, Jared?
Man, what up, y'all? I can't complain. It's another Saturday. Just enjoying it and trying to get some work done and stuff. Trying to keep up with everything. Like Kelly said, got a lot of stuff coming.
I see you shining, man. Got the cash flow shirt on. Got your little gold chain.
You know, we've been in the lab working.
Yeah, man.
We gonna let y'all know what's in the lab whenever we get done with the lab. That's not what we're here for today. Today we got another great episode.
Highly anticipated.
We got to throw that one on there. Yeah. with a great lady out of Philadelphia doing some great work in real estate, educating the people,
monumental work,
dropping just gems on the internet day in and day out.
She don't give a damn who she offends.
We talking about none other than Ms Ayesha Selden. Ayesha, how you doing?
What's up, y'all? What's up? You know, it's funny because I probably watched more TV in the last week than I've watched in the last 20 years. And I was watching Kill Bill, both volumes, which are two of my favorite movies. And I was like, yo, I'm Pi May. People always can you ask, can you teach us a little nicely? Can you say it a little sweetly? And I'm like, nigga, no. I am pardon my French, but fuck your feelings. It's we've got so much work to do. And, I Black Wealth Twitter and, you guys and folks on Instagram, we're just scratching the surface of what can actually happen, the renaissance that can actually happen in our communities. And, and I'm sure there are a bunch of people out there who are saying it nicely, but, I'm thinking, beginning with the end in mind, we've got so much work to do. I ain't got time to sugarcoat. I ain't got time to say it nicely. I'm like, let's just get it done.
And that's one of the things we love about you, because that's the same way we are. We're not going to sugarcoat it. We're just going to say what we got to say.
You got to get that information in the people's face.
Because everybody don't react to the nice, hey, let me hold your hand. Let me show you how to do this. No, sometimes they need a little bit of assertiveness.
Yep. And you know what? And that's a great point, because there are people out there who give a message different, in a different way that I do. And that's okay. There are pages out there where it's comment amen or say, say this word over and over. There are those pages out there. That's just not mine.
Yeah. So,
yeah, I speak from, what my experience is and what resonates with me and how I am. I try to keep it authentic. And I think that resonates with a lot of people, the authenticity.
Yes,
being real, just being yourself.
We was just talking about that with Ashley on the live. But Ayesha, I do want to cop into it now. We kind of got ahead of ourselves. Normally, when we kick off the show, we want to let you introduce yourself to our following, for all the people who are unfamiliar with you.
Yep.
And just how you got started on your journey.
Yep. So to take it back, this upcoming June, I will celebrate my 20th year anniversary as a stockbroker, as a financial advisor. So I got into this right out of college. I had a dual degree in economics and marketing with a minor in communications. Came out of Temple and started working in June of 2000 as a financial planner. So investing, actually stock investing specifically, that's my first love. So it took me quite a bit of time to learn how to become a disciplined investor, but that's where I got my start. 2 years after I became a financial advisor, I bought my first foreclosed rental property. 2 years after that, I bought another one. And then I just kind of continued with my stock portfolio for a number of years. And then in 2011, the Philly real estate market looked really, really attractive. So that was probably right around the point where our market here in Philly had bottomed from the Great Recession. So I started buying aggressively in 2011. I mean, I went from, 2-3 doors in 2011 to now I've got 44 doors. in addition to, doing some other stuff. So I've got a franchise, I've got my stock portfolio, and these numbers, it's all relative. There are cats out there with 3, 4, 500 doors. I mean, 1,000 doors. I mean, it's all relative. It's all about your own journey. We can build it however we want. Some people criticize the fact that I like low leverage. Some people say that I'm not scaling fast enough. I don't care, because at the same time, when you've got black swan events like we're in right now, literally every single one of my tenants could not pay rent and I'd be totally fine. So, I always tell people there's multiple ways to skin a cat, and that's what I like about investing. Find the path that works for you and rock out with it. So that's my background. So I talk a lot about this stuff on my social media platforms. I've got an Instagram page and Twitter page that I'm on mostly, both my name and Ayesha Selden.
So where'd you find your love for economics and everything?
Sorry, I got a crazy dog. So that's actually the joys of working from home. Normally I do these podcasts in my office, but obviously different times call for different measures. But to answer your question, my love for investing, I mean, I was that kid. For me, if I didn't have the mom that I have, I would have been a drug dealer without a doubt. I mean, I had already I had the plan laid, I had the money stacked, I knew who was going to be my runner. I worked at McDonald's when I was in high school, and I'm from the hood, that's what you do. Those are the examples that you have. All the money people sold drugs in my community. So I remember my mom coming in my room one day and saying, whatever you're thinking about doing, don't do it. And that was I had all the stuff laid out. I was like, all right, you going to sell it. We going to flip it. So for me, having my money make money always made sense to me. That wasn't an eye-opening thing. What I had to learn was, one, how to do it legally, and two, how to do it as a disciplined investor. Because I feel like most people, when it comes down to investing, most people respond to their money and their investments just like they do when they're in Vegas. They respond based on fear and greed. You're sitting at that blackjack table, your heart's racing, and you start making all the wrong moves because you're emotionally invested and your money's on the table. That's how people respond in the stock market or in the real estate market. If I were to ask a question how do you make money in the stock market? Most people would tell me, well, you buy low and you sell high. Sure, that's exactly how you make money in the stock market. You buy something when it's low, you sell something when it's high. But when it comes down to our money being on the line, just like in Vegas, when a stock drops, most people are like, oh shit, I need to sell this. I need to get out of this thing. Or when something has gone up that we don't own, has run up 20, 30, 40%, they're like, oh, I want some of that. So it's if you think about the psychology behind that, we call it behavioral finance. If you think about the psychology behind that, that makes no sense. You just told me you make money by buying low and selling high, but when our money's on the line, we want to do the exact opposite, which is why the average investor way underperforms the S&P 500 because we make all the wrong decisions. So, for me, becoming a disciplined investor was getting to that point where I could look around and say, arguably the best investor alive, Warren Buffett, back in the 90s, he was highly criticized because there was this .com explosion, right? So, and I mean, everybody was making money on it. All these .com companies were killing it. And he was like, this is a farce. He was like, it's a bubble. It's not going to continue indefinitely. And he was criticized as being out of touch. You know what you're talking about. You're an old geezer, all this crap. And he was 100% right. And a lot of people, me included, that was my very first investment was a technology mutual fund in 1999. And I lost 70% of my investment. And that was probably one of the best things that ever happened to me, because it taught me chasing returns for all the wrong reasons never work. So it took me going from a tech bubble burst to, then I was betting big on satellite radio. They had none of the fundamentals made sense, but I was chasing returns just like everyone else. So it took a lot of those little lessons for me to learn, don't chase returns, have a discipline, I wanted to get in on Bitcoin like everybody else because everybody else was making a ton of money, but I had to go back to my disciplines and make astute and disciplined decisions.
That's some powerful words right there. And you kind of answered my other question. I was going to ask what was your first investment, but I do want to ask you. So once your mom told you, don't do that, what did you turn to and say, you know what, now this is what I'm going to do to go flip my money?
So, I of course pretended I had no idea what she was talking about, which was
Of course.
Yeah, I was like, what happened, Mom? When? Who about to do something? So, from there, so at 16, when that was probably around 17, we had that conversation. I just focused on saving. And I know a lot of folks talk about that. Like I was just stacking my bank account because I didn't know what to do. Like the drug money made sense because I was like, all right, I can take money from my savings that's not earning a whole heck of a lot of interest, and I can give it to my homie. She can go ahead and sell it. We'll double our money, and then we re-up. So when my mom kind of like shot down my Griselda Blanco aspirations, I then just started stacking my cash, just waiting for the opportunity to learn how to legitimately invest my money. So I was, I had a lot of cash. I mean, at 16, 17 years old, I had more probably saved in my bank account than my mother did. So, and so that is innate in me. I'm a natural born saver. But like I tell people all the time, getting wealthy is not about being a good saver. Being wealthy is obviously first and foremost knowing how to save, but then more importantly, knowing how to make your money work while you're sleeping.
So I kind of want to go back into you talking about the discipline investing. What was the process of that, to become a disciplined investor? Was it books that you read? I know you talked about the .com bubble and the mutual fund, but I know, was there any type of learnings that you had to become that disciplined investor?
That's a great question. And we all learn differently, right? So for me, I don't learn through classes, podcasts. There are books that I've read have mostly taught me more about personal development, self-awareness, that kind of stuff. For me, trial by fire is the best way to learn. So to a certain extent, I had a second upbringing. I had a second raising, and that was basically what I call the white collar boot camp of being a brand new financial advisor. So my firm at the time, so when I started out of college, I actually worked for American Express, which most people don't know this, but many, many moons ago, American Express had a financial advisors division. So they had the card and travel business, they had the insurance division, and they had a financial advisors division. So when I came out of college, I joined the company because I was like, oh, who the hell wouldn't want to work for American Express? So that training that I got, because they basically took a bunch of us 22, 23-year-olds right out of college, they cleaned us up and put us in a room. There was probably about 100 of us, and they drilled into us scripts and discipline and models and leadership development courses and personal development trainings. So that's where I got a lot of my just disciplined investing strategies, just sitting in those classes, studying for my Series 7. So that's where I got a bunch of the stuff, but really trial by fire is how I learned. So me just making a bunch of mistakes, figuring out, okay, that doesn't work. Oops, that doesn't work. Getting burned again, that doesn't work. That's really how I learned. So I encourage people, and again, this is depending on how you learn. Some people get burned and they'll never touch an investment again. So some people need books, podcasts, classes, seminars, trainings. I think some of that can be a little bit of overkill because then suddenly people aren't taking action at all. But I often encourage people, open up a Schwab account or open up your Cash App and start buying some stocks, see what works, see what doesn't work. But that's just how I learn. So obviously people need to figure out how they learn and go from there.
That's a major lesson about learning how to learn, because that's that I think we talk about that kind of often. People really, they don't understand the difference between analysis paralysis and the necessary loss that you're gonna have to take to really learn that lesson. Because
everybody got to take a L. It doesn't matter who you are, where you've been. even like you just said, Warren Buffett, I know he's been burned before. You have to take those L's so you can learn and come out on the other side, like you said, more disciplined, more creative now. And now you have, okay, that didn't work, so let me not do that again.
Yep. I mean, I even think from a real estate perspective, I have, like, people wonder why I say don't buy at the peak of the market, new construction condos in a high tax area. And people will be like, well, I feel like you should because I like condos and they will mow your lawn, and the reason I can say all that stuff is because I bought a new construction condo in a high tax area. Like I did that. I've been there. In fact, I've got one of those condos today that I bought in 2007. It was new construction in a high tax area, and it's a condo, so I have a condo fee. I couldn't sell that thing today. So we're talking almost 13 years later. I couldn't sell it today for the note I still have on it.
Is that in Philly?
It's in a suburb right outside of Philly, in a high tax. I mean, it's a better school district, but it's in a high tax area, suburb right outside of Philly. So I speak from experience. That in 2007 taught me what not to do. And you can look back on it in retrospect and play Monday morning quarterback. But that's why when I said to someone in 2019, 2020, why it would not make sense to buy a brand new construction condo in a high tax, and people were like, well, why? Like, why are you saying that? Like, because I got that T-shirt already. So most of the things I talk about are 100% from experience.
I'm glad you mentioned buying it in 2007 because that's something we did want to go back and talk with you about. So you went through the .com bubble and you went through the Great Recession. So how was that whole experience? How was it navigating that?
It was, fortunately for me, I was more heavy stocks in 2000, right around the recession period. So I didn't have a lot of real estate, but one of the things that it taught me just watching other real estate investors is not to be over leveraged. So, I went into the recession having a few doors already, not a whole lot of debt. So even if I needed to drop my rents, which fortunately I didn't, I still would have been okay. But I saw a lot of people like dropping like flies, like bankruptcy, like Chapter 11, Chapter 7, like people were dropping like crazy. It was short sales everywhere. One of the most eye-opening experiences for me was buying a foreclosure, walking into the house for the first time after we closed on it, and I just happened to pick up the mail, read through the mail, and it was like someone I knew, and I'm looking at this mail like, yo, I know her. Like, I didn't know this was her house I was buying. And I know her story. So when I talk about don't be the Joneses, she was a Jones. Like, you couldn't tell me she didn't have her financial stuff together. Had the Range Rover, had everything from an outward perspective, everything looked like she had it all together. And I bought her house in foreclosure. So, when I say these things, and a part of the passion that I have around oh, can you say it nicely? And, oh, why are you saying that kind of stuff? I'm not trying to be like Cosby was, shitting on black people, on a world tour ages ago. I'm speaking from the perspective of, we have so much talent, so much wisdom, so much opportunity, and help ain't on the way. So it's up to us to figure this out.
Why do you think so many people on the usual basis give you pushback on that? When you tell folks that hey, I'm not counting your pockets. I just understand 9 times out of 10, if you have this expensive car and you don't have the assets yet, I deal with these people on a daily. I saw you tweeting about that. It's just it's coming from a place of experience. Why do you think so many people don't think that?
Somebody was just arguing with me on IG about someone that I had posted on my page, and they went to his page and said, based on what I can see from his page, it doesn't seem to me like he has a lot of money, right? And right. I'm curious to know, what does someone's page look like who has a lot of money? And they're like, oh, well, I would feel like somebody that had this many millions on their page, you should be able to see the wealth. They should have this card. And I'm like, and this person is dead serious. And I'm like, So, and I'm like, you do realize a fool and his money are soon parted. Like, you're sitting there telling me that like the average, you know, he used the analogy of like a ball player. Like, you know, you can't play ball or show you can play ball without like your highlight reel. Like, people want to see if you're talking about money, we want to see where you're spending it. And that's like,
that's the problem.
Listen, this man was dead serious. I felt like I was being catfished. I was looking around like is he saying the problem in Black America, like right here in my threat? Like, is this actually, like, you're actually saying this to me? And, you know, I'm sitting there like, you know, let's use the ball player analogy, right? Because we could argue that they actually do have the money, but you do realize that statistically, most of them go bankrupt stunting and doing the same shit that you're saying that this young man should be doing. Right? So it's like, you know, and are we the only ones? No. Like, you know, we ain't the only ones. And I feel like when I say these kind of things, people feel like, well, you attacking the Black community. Like, I ain't got nothing to do with the Chinese community. I ain't got nothing to do with, like, I ain't got nothing to do with the white community. Like, my purpose is to fix our community, right? So, like, if I'm not talking about any of them, it ain't because I think that we're the only ones doing it, because we're not. This is my mission, right? I ain't got nothing to do with what they're doing over there. So, you know, I feel like in our communities, that's a lot of our mindset. And you can blame it on whatever. You can blame it on rappers. You can blame it on Instagram. You can blame it on social media. And, you know, and I'm not blaming it on today's rappers, because, you know, this shit was cool back in the 80s, like Kool Moe Dee. Everybody wanted them changed. Like, so it's, you know, it's a narrative that's been perpetuated over and over and over again, that, you know, we feel like in order to be successful, you know, we've got to, you know, we can be in poverty, and as long as we can stunt a little bit, we're doing okay. And the reality is that ain't okay.
Oh, and that's so true. Like, just with the poverty part, because us living in Louisiana, I see it all the time. Like, I see this person coming through with this car, some 26s, like painted out. You pull up to their house and the damn roof falling in.
Yeah. And it ain't even theirs. You know, like it's like not only are you in this house that's like in shitty shape, you don't even own the thing. So it's nuts, you know, and it's a problem. Hold on, my dog is going crazy. Sorry, y'all. That's him making all that noise.
Is it a boy or a girl?
He's a boy. This is his name is Nip Hustle.
What's up, Nip? What's up, Nipsey? He just wanted to be on the camera.
Apparently. So yeah, I mean, we got a lot of work to do. We got a lot of work. We got a lot of folks to touch. And it fires me up. It angers me. It, like, you know, it insults me sometimes. I love it. You know, I got like every single range of emotion tied into seeing us as a community do better. So that's why I'm doing what I'm doing.
So with that, I want to ask you, what do you think is one of our first steps to advancing as a community? What was that one thing you would see, okay, this is what we need to do to just start at least?
I think the first thing is recognizing, and I say this all the time, that help is not coming from the government. You know, it's like people are, especially like top level government. You know what I mean? Like, people are like, well, I'm going out and I'm voting for a change. You know, you were poor under Obama. You still poor under Trump. You're probably gonna be poor under the next president too. You know, it's like it's not happening. You know, I could almost see if you were talking about like making a change with like your city councilman. Like, sure, maybe you got a better chance. Like, especially if you know the dude, you can probably like kick him off a little something to give you some breaks. But, you know, I think that we need to first and foremost realize that it's up to us. It's up to every single one of us. So, you know, once we realize like help ain't coming, especially on a federal level, I think we can buckle down and start to have some serious conversations about what we need to do to advance. And what you guys are doing, you know, these podcasts, our social media pages, you know, I feel like to a certain extent, you know how people like rag on vegans, you know, because they always talk about like plants and don't eat it. I feel like we're like the vegans of Twitter, you know what I mean? Like the black wolf, like, yeah, like all we talk about is money, like, and people are like, outside of Black Wealth Twitter treating us like, you know, we're
they crazy. They don't want us to have no fun. They just
we can't do, you know. But it's like there's such a mindset to shift. You know, we need to be louder. You know, and we need more influencers to be louder. Because it's going to take our community to get us out of the situation that we're in.
Yeah. You just made two very key points. One of them was the lobbyist referral that you had. I think that's definitely important, especially like you said on that local
scale.
No, on that local governance side. Like if you can lobby with your city council, or if you can get something done within your city. I don't give a damn what's going on in New York. I live in Louisiana. I live in Lafayette. If I can start seeing those small, subtle changes, the act of inertia, once you put things into motion, it's going to keep on rolling. It's going to start building up. It's going to start taking a massive effect. Yeah. And where I'm from, Opelousas, Louisiana, man, we had a black mayor, a black chief of police, a black like our government is black, but our town is still shitty.
Don't change.
Yeah.
Shitty.
Yeah.
So you're right on that.
I was just thinking, you know, and I'm a registered Democrat, but you know, I was saying to someone recently, and thinking about this recently, that, you know, we've been voting Democrat, thinking that that's going to fix our communities forever. You know what I mean? Like, how long? Like, you know, okay, if we just get a Democratic president, things will be better. You know, weren't you poor the last Democratic president that was in, you know? So, or like Philly's had a Democratic mayor for probably my entire life. I mean, I can't remember Philly having a Republican mayor. Philly's a very black city. Probably not as, you know, maybe not as black as Baltimore, but you know, we're a pretty black city. Blacks are really, really poor in Philly. So it's like, if we've had Democratic leaders, most, you know, and black mayors forever in Philly, and we're still struggling with poverty, like it ain't adding up. Like, so, and we keep going down that hopeful, we can just get another Democrat in. It's like, you know, when are we going to realize and recognize that more is required? But, you know, what do I know? I don't want to be a politician. So I guess I can't really complain about politics too much.
Yeah. But still, just that personal accountability piece. That's that shit that people don't like to talk about that we gonna keep talking about.
Yep. Agreed.
And
so
speaking,
what you got, Jared? Nah.
I was just gonna say, speaking even further, like considering that you mentioned personal accountability. I'm sorry, that came out weird, but I wanted to go back to what you had said before, kind of talking about the social media portion, and I feel like that's something that a lot of people kind of go around on social media, is that personal accountability of, it's like, well, you know, I did this, I got myself in this situation. How do I get myself out of these situations? And I also, I want to go back to your tweet. I know that, you know, shook the world for a second there, where you talked about like being a 20-year-old, sacrificing your 20s, and then going through it, and then turn around, and now, you know, you can turn around and you had that personal accountability and the sacrifice along with it. And now you can say stuff like, you know, if I want Italian, I can fly to Italy.
Yeah. I mean, you know, it's funny because that tweet jarred a lot of people, some in a good way, and some like responded. They responded so negatively to it. I knew it triggered something inside of them. Like, you know what I mean? Like for people, like people got hostile about that shit. Like,
oh yeah, they got mad.
Yeah, they got mad. And it's like, you know, and I never said like, y'all need to do it the same way I did it. You know what I mean? It wasn't like I sacrificed my 20s, worked 60, 80 hours every single week, and that's what you have to do in order to be successful. I never said that. That was my path. I'm a workaholic. Like, I like to work. I like to hustle. I like to grind. I'll be on vacations. Like, my sister will be mad. We'll be on an island, and I got my laptop out. Like, I can sit at a beach or pool and rock out. Like, but that's just me. That's not everybody. So, but I feel like for that post to have triggered and jarred so many people, I think that it made some people recognize their own inadequacies And instead of like stepping up and saying, you know what, yeah, no, I partied my 20s. Like I had a good time. It was what it was. And now here's what I'm doing to get my situation to where I needed to be. Like, or, like, you know what? I don't need to be able to fly to Italy at 41, if I want dinner. I'm cool with, going to the Olive Garden and rocking out. So I'm going to get my stuff together so that I can do what I want to do. Like, so I think that most people a lot of people didn't take that message the right way because of their own lack of personal responsibility. I think that there's also, just in my own personal development and growth, I think that there's so much of a battle that, is both on social media and just kind of out there in general about the idea of a self-made person. Because that's where people start to they have this inner turmoil of, I was basically saying I came from nothing and went from nothing to a millionaire by 30 and now at 41. I mean, I could retire today. I work now literally just because of, I'm being greedy. So, the distinction is, I feel like, or my own personal growth is coming from, I recognize I had advantages that other people didn't. And me growing does recognize that. Because years ago I wouldn't have said that. I would have been like, no, I'm straight from the mud. I'm straight from passion projects. So I went from, here to here, on my own back. But in recognizing, I did have that mom who was like, you know what, whatever you're thinking about doing, don't do it. People are running around on social media saying my mom's a college professor at an Ivy League school, so I went to an Ivy League, and none of that is true. But my mom is a nurse, so my $20,000 of my college education was paid for because I went to Temple College, and she's a nurse at Temple Hospital. That's an advantage. Not to say that $20,000 would have made or broken my story, but not everybody got that. Not everybody had a mom who loved them. I didn't have a dad around, but I had a mom who was I say she's the GOAT of moms. She was everything. Not everybody was loved as a kid. So there are, I take those as advantages that I did have in life and recognize that. But at the same time, we've got to take responsibility and accountability for our own stories.
With the advantages thing, I hate that that's always the mentality on it too, because
they had a head start.
They had a head start. Well, okay, yes, you can't help your situation from wherever you started, but you can still do whatever it takes to, I always looked at it as it should be a situation where if somebody had a leg up on me because something their parents did for them, that should be inspiration to me to do better for my children versus hating on them for their parents doing better for them.
Yep. No, I 100% agree. I feel like most people, you could argue that for anyone. I when that whole tweet went viral, a little viral, I had somebody say to me, if you grew up in the United States, or if you were born in the United States, then you had an advantage that I didn't have. He's like, you don't know nothing about fighting to get out of your country during war times, trying to get out of your country to get to a safe place. I'm like, no, nigga, I don't know shit about that. I don't even know what you're talking about. So, you can argue that we all have, some sort of advantages. If you were born free, you've got an advantage. So some people are like, well, if you were born with two parents in a suburb, you're you have an advantage. At the end of the day, I'm not looking at what anyone has or doesn't have or had an advantage over me, and however they utilized it. All I'm thinking about is my journey. I don't care who was handed what. Only scoreboard I'm watching is mine.
I love it. And I kind of want to go back to the beginning of your story, and so I just want to make sure I'm correct. Financial advisor and stockbroker, they're two separate things, correct?
No, they're both one and the same. So I have my firm, which spun off of American Express, probably 15 years ago. They kind of operate like a McDonald's. How McDonald's can have a corporate site or a franchise site. So my firm basically operates the same way. You can either be an employee, financial advisor, stockbroker, or you can go on the franchise side. So about 6 years ago, I went on the franchise side. So my 9 to 5 basically is as a financial advisor, which you have to have your Series 7 license, broker license to do what I do, or at least at my firm. I became a franchise owner of my practice in 2014.
Okay, I love it. And see, I never knew that they were the same thing. So thank you for clarifying that for me.
Yep.
So I kind of want to fast forward now to the current times that we're in with the stock market and how volatile it is, and just can we get some insight for those people who might be a little bit fearful as how they can navigate through this and how they can come out on the other side ahead?
Yeah, so I'm a little limited in what I can say about stocks. So I'll be fairly generic, which will be intentional, because my firm they highly scrutinize me giving advice via social media. So when the market started tanking back in I think end of February, my message to people was, don't get scared, buy the dips. So if the market falls from 29,000 down to 25,000, I started to peak up. And then when it dipped to 22,000, I'm like, yeah, I need a little bit of that. So I started watching the stocks that were dropping and, just very generically tweeting, buy the dips. And then when the market dropped below 20,000, I kept buying. I said, okay, so we're basically talking a 9,000 point swing in the Dow. So I started buying some more. The Dow dropped below 19,000. I bought a lot more. The challenge is that's when most people are panicking. Warren Buffett says, arguably one of the best quotes, be fearful when others are greedy and greedy when others are fearful. When most people are absolutely scared, which was, a few weeks ago when the market was below 19,000, those are the times to buy. And most people, and you've got technical analysis versus fundamental analysis. The technical people are like, oh, we haven't hit our bottom. And I don't know what they're saying today, because now that the market's going from back above 19,000 and is now at, I think, 23,000 or so. I don't know what they're saying now, but I was preaching to people, you can't time the market. We don't know when it'll bottom. So if it's dropping, dollar cost average, just keep buying in small increments into the market as it goes down. And that's a philosophy and that's a strategy that's worked for me over time. People who have these technical analysis charts and they think that they're, super smart and trying to figure out when is this thing going to bottom. I don't even know if they ever even got in, because I know most of them were saying that we weren't at the bottom. So I hope they bought some at 19,000 or 18.5 or however low it got. But that was a great price.
Hey, y'all heard it first. So y'all definitely learn how to adjust y'all risk tolerance. When y'all seeing it going down, stop purchasing.
Yeah, so there's some really good companies that you're they're probably not going, Apple's probably not going under. They got a lot of cash. There are companies that you look at there that you're they're probably not going bankrupt. But I would also say that these are obviously unprecedented times. I read an article today and I tweeted about it that said unemployment could hit 30, I think it was 32% or something. I don't think that's ever happened, ever.
That's Great Depression.
Great Depression was 25%.
Really?
It's worse. Yeah, Great Depression was, I think, capped out at 24.9. 30-some% unemployment. I can't even. That's looking at Americans. 1, 2, you're out of job. 1, 2, you're out of job. That's a lot of people. So, we don't know. I think it's saying that we're currently sitting at somewhere around 14% or so, which even that's high. We haven't seen numbers that high since the late 30s. So it's already pretty bad, but to go to 30% or higher is just, I can't even imagine. So I say all that to say, we may test those lows again and and people, Ayesha, what are you going to be doing? I'm going to just keep buying. Yeah, if the market dips further, if it dips to 16, if it dips to 10, I'm buying.
I love it.
I think it's really
Oh,
cool. I really like the awareness in that. Like, you are basically coming up with, like, I have a strategy. This strategy has worked for me because I done bumped my head a bunch of different times on different strategies, and this is the one I'm rocking with. So I'm buying the dips, and that's how I'm gonna go.
Yep.
Whether it's looking crazy or it's looking good. If it's dipping, I'm buying.
Yep. And you know, and the crazy thing is, I be scared as shit. I ain't even gonna hold you. I be scared. Like you know what I mean? Like, there are days I'll be sitting in my apartment like, yo, like this thing is getting like crazy. Like, you know, like, but it like you just gotta keep doing it. You just like, you gotta think like, let me untie myself from this emotionally. And what would I tell my clients to do? I would tell them to keep dollar cost averaging, keep buying as it's dropping. And, you know, it's easy because people can look back at 2008 and say, oh, well, you know, you should have sold here, bought there, sold here, bought that dip. You know, you should, like, it's easy to say that after the fact, but we don't know where we are in that chart. But what I do know is if I look at a 2008 chart and said, you know what, if I was buying, and then the market went significantly higher even than the prior peak in 2007, do I really care if I didn't catch it at the bottom? Nope.
Message.
I think one of the hardest things is when you're dollar cost averaging is keeping your money. So it's hard, it's so hard to, like, when it dropped below 19,000, like, to not just throw all of it at it.
All of it in. Yep.
Yeah, I think that's one of the hardest parts when getting people especially new people to start dollar cost averaging.
Well, see, that's why fundamentally the premise of dollar cost averaging works from a recurring, like, stream of income. You know what I mean? So, like, if I'm, you know, I wasn't dollar cost averaging my entire savings into the market, you know? So I was dollar cost averaging, like, you know, the average person is dollar cost averaging their 401k contributions. They don't have all of that all at once. You know what I mean? So if the market's going down, they're buying through biweekly payroll contributions. Or if you get paid, if you're a business owner and you get paid every other Friday, you're taking your pay from every other Friday and throwing it into the market. So, you know, I'm never encouraging people, and that's, you know, people were saying, well, you know, you don't want to catch a falling knife, and, you know, I'm not telling anybody to throw their savings into, you know, what could be a fire market for the next 3, 6, 9, 12 months, 2 years. This should be long-term money that I have no intentions of touching it in the next, you know, 3, 5, 7, 10 plus years anyway. So that's not my savings. So that shouldn't be like a limited pool of money. That should be money that's coming in constantly anyway.
I got another question. It's kind of shifting gears back into the real estate. You had tweeted earlier, or maybe it might have even been last week, about people buying single families, or people not buying single families versus multifamilies, and that whole, how they got misconstrued. Can you talk about that?
Yeah, so, you know, I think that people get so caught up in, like, the sizzle of the gurus, right? So a lot of gurus out there, Grant Cardone especially, like, preaches about multifamilies. Don't do single families. Don't do this, don't do that. But you really just have to find what works for you. I mean, I know people in certain parts of the country, St. Louis, Memphis, wherever. I mean, they're getting, like, crazy cap rates on single family properties. Why the hell would you?
It's so cheap.
It's so cheap. I mean, I know people in St. Louis getting like 20, 25% cap rates. So you telling me, like, don't do that so that I can buy a 2 or 3 or 4 or 5 unit in Miami? You must be out your damn mind. No way. So I bought about at least a couple dozen, 25, maybe even more single family properties before I bought my first multifamily. Because for me, I am a cash flow investor. The very first question I ask when I'm looking at an investment is, if I put my money out, how long is it going to take me to get my money back? That's really all I care about. You know, there's a couple other dynamics, meaning, like, I need to make sure that it's a relatively, like, a reasonable person would live there. Like, I'm not investing somewhere where I can't imagine a reasonable person living. You know, so there's a few other variables in there, but my primary question is, if I put 20 grand out, how long is it going to take my 20 grand to come back to me? Because at that point, I'm playing with the house money. You know, after that, we cool. You know, so if I get my 20 grand back, And at that point, I'm getting cash flow from, you know, up and above and beyond my 20K. I'm having fun at that point. Like, cause we just playing with house money. My money's already returned to me, and we just this is a shits and giggles money. Oh, we cool. So whether that's a single family, you know, so if a single family is going to run me my money back faster than a multifamily would, I'm going with the single family. If I find a multifamily that's going to run me back my money faster than a single family, I'm going multi. So if you call yourself a true cash flow investor, your goal should be getting your cash back as quickly as possible. Whether that's a single family or multifamily, you want to rock out with the one that's going to give you the highest cap rate. But people get so caught up in this, oh no, I only buy multis, you know, because, you know, and there are pros and cons of each. You know, people would argue that, well, if one of your units goes vacant in a multifamily, you still have 2 other tenants and they're still paying rent. And I could argue that one of them crazy ass tenants could pour cement down their toilet and suddenly the plumbing ain't working for the whole building. Ain't nobody paying rent. Like, you know, you could argue pros and cons to each. So don't tell me like, you know, oh, well, you know, you may have a tenant. I have tenants in a 4 unit I have in North Philly arguing and texting me talking about one of them or 2 of them didn't bring the trash can in. I'm like, are we adults or are we children? I'm not sure like why y'all grown people are contacting me about somebody who didn't bring the trash can in. So, you know, there's I never get that from single families. Like, you ain't gonna call me and tell me what the neighbors do, and that's not my problem. Mm-hmm. So, you know, it's pros and cons. All I care about is run me my money back.
Yeah. Is it a deal?
Hey,
damn it.
So that's the bar right there. Ayesha said, run me my money.
My money. ASAP. Stat.
And that's a shirt.
So, I need Ayesha right there on the front.
So I want to get into what you're saying that means that you manage all your own properties yourself too.
I do. I've never, in fact, I just rented today my last single family rental that I just finished rehabbing, and I used an agent to do that, which that's even the first time I've ever used an agent to get a property rented. Prior to this, I've been 100% listing on my own and 100% managing on my own. And the only reason I did it this time is because I pulled it off. She's a good friend of mine. And I pulled it off because of the coronavirus. And she's like, no, I think I can move it. And she did. But other than that, I'm trying to keep all my money. And most people, you know, people ask, you know, how do you have 31 buildings? And I think I've got like 4 mortgages, I think. And it's largely because like 10% of my rents don't go to property managers. The only way I would really hire someone or pay someone a premium to manage something for me is if I was physically not in the area, if I was like out of state and I couldn't physically do it myself. But all my rentals are here in Philly. I pay someone a premium to GC my project out in LA because I'm not there. It's 2,400 miles away, so I can't.
I want to get into that next too.
Yeah, I mean, all my properties are here in Philly, so there's no reason why I can't do it. Now, what I've said is, I'm starting to get to that point where I've been working for a long time. I've been working really hard and I want to focus on some other stuff. So I've got 12 more units in my inventory to rehab and rent. So once those 12 are done, which will add another like 12,000 onto my rent roll. Once that's done, I will probably have someone manage my entire portfolio, someone who works 100% for me. So I'll finally delegate that out, pay like a fixed salary, and I may even offer that as a service to other investors to kind of offset my cost, because I want to spend more time out in LA than here in Philly eventually, and focus on like more teaching and books and all that stuff. Oh,
that's dope. So my next question with that is, what has been the biggest lesson since getting into real estate versus being in the stock market? What was something that you was like, okay, I can't keep doing this thinking that it's real estate? I mean, stock market.
You know, I approach them very differently. I mean, I buy primarily dividend paying stocks. I like income. So I primarily buy dividend paying stocks. Real estate was kind of comparable because I'm looking for income in both strategies. You know, for me, I have a love for both. I like real estate a little more because I can get, I won't call it guaranteed, but to a certain extent, I can predict my returns. And that's what I like about real estate more. I mean, to a certain extent, once I know the cost of the building, the cost of my rehabs, I can pretty much estimate what my return on my investment's going to be. In the stock market, aside from the dividend, which could get cut at any time, I really have no idea how much I'm going to make.
Yeah. And I'm glad you mentioned that with the dividends, because one of my friends was talking about that. He was like, "Hey man, I ain't got my dividends," and a lot of companies right now they suspending dividends. Or they in talks. If they haven't already, a lot of them are, because like I think it's real interesting with right now in the economic times, like even with the market, like just watching it, like you see it continue to go up, but you hear all this bad news and these bad projections about like Q2 earnings, and I wonder when the kind of like the reality is going to set in that regard.
Yeah. I think that we're going to probably see a lot of companies cut dividends significantly over. I mean, if we don't know what's going to happen, because again, these are unprecedented times, but if we see unemployment hit anywhere near the levels that they're forecasting, oh yeah, dividends are absolutely going to get cut. Yeah. I mean, it's not a question.
Did they cut dividends in 08?
I can't remember any companies that I held cutting their dividends. Like I had quite a bit of Apple back then, but Apple didn't even pay a dividend until I think like 2012-ish. So, they didn't cut because, I mean, most tech companies don't pay dividends, but Apple wasn't paying a dividend back in 08, and I had quite a bit of Apple.
So I have a question, because you mentioned several times, and it's very accurate. Like these are unprecedented times, and it's it's crazy. So with that being said, if somebody was trying to get started, where would you kind of coach them to go? Would you just say save all your money right now and kind of wait, or?
I think that I think there's steps in this process. And I think that, a lot of people like miss those steps and jump from from a financial shit show to thinking they can be an investor, but there's a whole lot of work that goes between where you may be right now to point of arrival. So I think that one of the steps between being a financial disaster and a disciplined investor is learning how to first save and pay yourself first. So I think that people advance and kind of jump way too quickly. I've seen investors who own rental properties, but don't know how to budget and save. And then they wonder why their property is being foreclosed on. I talked to one investor and she was telling me that her rental was being foreclosed on. And I'm like, damn, I'm sorry to hear that. How long has the tenant not been paying rent? And she's like, well, what do you mean? I'm like, well, you losing the property, like was the tenant not paying rent? She's like, oh no, they were paying rent, but I needed the money to use it for, so I'm like, wait, no. I'm like, back up. That wasn't your money. Like you're basically, as a landlord in that position, you're like a conduit between the tenant and making sure that the bank gets their money. That was never your money to even spend. So when you get people who don't really get that because they haven't learned the disciplines between going from financial disaster to being a disciplined investor, I think that misstep or skipping that step is what creates a lot of problems.
That's important. I like the way you put that together, because a lot of people think, if I just get started, if I could just get, into whatever that ideal asset is for them, that, that's going to fix all my problems. But it's like, if you had money problems before that and you don't know how to manage your money, you still don't have those problems.
But people don't like to hear that part right there. People don't like to hear that. People think more money solves their money problems. And no, the hell it doesn't. Your problems just become bigger. Even Big said more money, more problems. Like, it's like the way this works is like, if you don't have the financial discipline to manage where you are today, even if your income shot up 10 times, you would go through what we call lifestyle inflation. Mm-hmm. Your lifestyle would gradually elevate up to a level where your new income was. So suddenly you got a bigger car, a bigger house, a nicer car. Your kids are in private school. And I don't think that people get that. Most people think if you were to give me $1 million, I would be set. It's like, no, you'll probably be broke in just, about a week. It's because if you couldn't manage the $1,000, you can't manage the $1 million.
Because you're gonna buy everything that you wanted,
and then you're not going to invest none of it.
Yeah, most people do not want to hear that, or they would buy into like a get rich quick scheme and say, "Oh, investing didn't work for me." You can't tell most people that.
Got to let them learn for themselves. I know we still young. We just fresh into the game ourselves. I mean, what, this year 2 for us? This like two. Really just, but those lessons and losses that you got to take. Like I got caught up in a get rich quick scheme whenever I first learned about investing and all that. And like the lessons you learn from that, now I think it helps me just navigating like different investment opportunities. It was Forex, by the way, just to mention. I got caught up in the Forex.
About right. Yeah, there's a lot of lessons to learn in this game, and I think actually those are great lessons. I mean your Forex get rich quick was the equivalent of me buying a technology mutual fund in 1999. I know it's the chase. It's made so much money. Oh, it looks great, and that's what we fall into. But if you focus on and start working on the disciplines of investing, you don't get caught up in those kinds of things. Because in my mind, I think a couple things. One, actually, I think everything's a Ponzi scheme. Like, I think everybody's running a Ponzi scheme. Like, I'm always like, that's always my first thought. I always tell people, if it sounds too good to be true, it more than likely is. Right? If somebody's telling you they're going to give you basically what is the equivalent of a 70%, 80%, 100% annual rate of return.
How?
And some of this is just education, like one of my favorite shows is American Greed. And, you're listening like, you thought that was possible, family? Like, what were you thinking? Like, they basically told you they were going to promise you the stars and you didn't think for once. That sounded a little too good to be true. So, and that's what I try to like educate people on, like looking at how do you analyze numbers? How do you look at realistic returns? Because I think everybody out here like just capping, like, no.
You got me on my soapbox now. I'm thinking about some shit. So I see everybody doing this damn Cash App scheme right now, right?
Oh,
this
man.
Get Rich Cash App. You Cash App me $25. We're gonna do the pyramid thing or whatever. But once you start to educate these, I was about to curse. Once you start to educate them about, hey, start learning about financial literacy, start learning how to save and everything. That doesn't become feasible. That's impossible. But you gonna pay these motherfuckers
It sounds like work.
$25 to get to $800, and once you get to the top, they gonna pay you out?
Yeah, nah.
That makes sense.
Nope. Nah. Yeah,
but you said something in there that I did want to pick out too. Like, I really like that with a lot of it is lack of education. Like, a lot of it is just people don't understand. And you can tell that from the conversation that like they really genuinely don't get it. Like, for example, we did a video for our Instagram page where we were explaining like how 401ks are tied to the stock market. I had family contacting me saying like, hey, should I cash in my 401k and, go, buy some stock and do this, that, and the third because the market's going crazy. They just really genuinely didn't understand. Like, or like, for the example, today, I see a lot of people talking about with the stimulus packages, people being like, hey, I got my $1,200. Well, how did you get your $1,200? You supposedly make so much money. But folks don't even understand, like, LLC Twitter, as they call them, like that can go on a completely different ledger. That's not even my money. Like,
no, I mean, there's so many, like you said, it all comes down to education and knowing how to work within the system. Mm-hmm. And I think that education, financial literacy, and everybody likes to clown that term. It's so lacking in our communities. That's how people get over on us. And we all know, there's so much predatory stuff happening in our community. Because when you do it to people in our community, you tend to
Nobody
get
makes a fuss about it.
Yeah, that's
you
real
tend to
shit.
get away with it. Like, I was there's a guy on Twitter that somebody just said yesterday he's a scammer, and there was a guy who literally wrote like a whole blog on how he was scamming people. And I'm like, this dude got a lot of time on his hands. I'm like, black people we ain't got that kind of time on our hands. Like, this man had like a whole like ledgers, bullet points, letters, tweets. Like he had this man did research. I'm like, this man is a Karen. He is like a legit Karen. And because we don't have Karens, like, you know what I mean? Like, we don't, like, when are we doing all that shit? It's like somebody burnt me, like, God damn it, they got me. We've got this no snitch, like, mantra in our community. And it's like, so because of that, like, people get burned, nobody tells. And it's like, you don't want to be a snitch. You don't want to be a hater, because suddenly when you on somebody's page and you calling them out, you become a hater. So it's, we got to educate ourselves, because we ain't going to snitch, and we ain't going to be a Karen, and we ain't going to do all this other stuff. We still have to watch out for our community.
F that. I'm telling you. If you taking me out of my money, I'm taking you to court.
Listen, let me tell you something. If somebody, and that's a part of the reason why I do all my own investing. I don't buy into feeder funds and all. That's a personal preference. Partially because I have control issues, partially because I think everybody's running a Ponzi. And I know for a fact that if someone burned me, I'm going to jail. It's not even like I know the pure rage that would go through me. And somebody got to raise my dogs. Like I would lose it.
Oh.
So, yeah.
You can't be leaving hustle by itself out here. Come on now.
Listen. He will be out in these streets.
No, I take him. Don't put him out in the streets.
No, that's my baby. He be in cell block D with me.
Y'all got any more questions, fellas?
Nah, man, she came through. Thank you. I was just on to say that.
This is great stuff. I love the work that y'all are doing. In case someone hasn't told y'all recently, our community needs this. We need y'all. Keep doing what y'all are doing, because this is much, much needed. And y'all probably have no idea how many lives you're impacting. And like, people are impacted by the people that you impact. I mean, this is the stuff that we need more of. So keep doing what y'all are doing. I love it.
Thank you so much. Thank you. Like that mean a lot coming from you.
Yeah,
like we really.
Yeah, I was about to say coming from her.
Yeah, like that shit hit different. But we gonna pick up it to the last segment of the show, Ayesha. We want to ask you what's on your timeline. What's something that you've seen or posted on social media that you want to talk about?
Actually, we already did. That tweet, it was actually on my Instagram page, that comment that young man said about how if you've got money, it should be flashed on your timeline. We should be able to see it on your page. Is that like, I'm going to think about that probably for the next month. I'm really going to think about that for the next month. I could not believe someone actually, wrote one of the biggest problems that's in our community today. And this man was like dead ass serious. My mind is blown. I need to go back and like reread it.
Don't do it.
Yeah, you're right. I don't even need that kind of negativity in my life.
You subjecting yourself to the trauma. Don't even do
it. Yeah. I couldn't. I mean, that's probably one of the most interesting and sad. And normally I would like retweet that person. Kind of like put that on blast. But I don't want to embarrass him. I don't think that he was being malicious. I think that was just like, if I thought he was being malicious, I would retweet and make an ass out of him. But I don't think that there's no intent there. I think that that's just literally just ignorance.
Yeah.
And that to me is sad more than anything.
I agree. I definitely, I see that too a lot with on social media, where people, it's certain situations where it'll be like, all right, you're being aggressive, and all right, they check them off. But other instances where it's just like, you genuinely, I can tell you really just don't get it. Like, you don't understand.
Yeah, no, he didn't get it. Yeah, he didn't get it.
Well, we're gonna pray for homeboy.
Yeah, man. But you know, like they said, man, everybody can't come. I always been the subscriber to the belief too. Like with people like
right.
that, like
I'll lead you to the lake.
I'll lead you to the lake, but I can't force
you.
you to drink. Like if I put it in your face, you ask the question like you said, like he wasn't malicious in his approach.
Yep.
I can put the information in your face. You do with it what you must. Like I can't sit here and drill it into your head that look, this ain't what it is. Like this ain't wealth. Cause you gonna have to. I always say that you got to do it for yourself first. You can't. Nobody can do the work for you. Yep. Like people hit us up. I want to invest. You gonna have to learn how to invest, homie. I can't do that for you. I'm not a financial advisor. I ain't trying to go to jail.
And we ain't running no Ponzi scheme.
God damn it. I love to hear that too. I mean, you know how I kind of how I'm kind of trying to, because I at first I thought I could save everybody, like everybody. They just need to hear the info, like. But what I found is that a lot of people wandered in the wilderness. Not everybody made it to the promised land. So everybody ain't gonna make it. But the work that you guys are doing, the work that myself and other investors are doing, just to get the information out there, it will get a lot more people to the promised land than otherwise would. And all we can do is what we're doing.
Amen to that. We're gonna keep on doing it until we can't do it no more.
And be an example. Be that shot. Like talk about what you're doing. Talk about what you got. Let them see a stunt just a little bit. You know what I mean? Like put it out there so that like folks know. Like I mean, there's Philly me and then there's LA me. Like in Philly, I'm riding around in a pickup truck, my tire kind of flat. It's like I'm like barely making it out here in Philly. In LA, I got my Porsche out there. I'm riding around like I live a little different out there, but that's Philly and that's LA. I make my money here, I spend it there. So
I love it. Well, I think that's all we got. Before we wrap up though, we'll get into some housekeeping. No. Can you tell them where they can find you at on whatever you use, social media, so Twitter, Instagram, anything you want to plug yourself in?
Yes, I'm mostly on. I do have a Facebook account, but I'm almost never on there. So Facebook, I do have a page, but I think I'm close to my 5,000 followers or friends or whatever they call. But I'm mostly on Instagram and Twitter. At Ayesha Selden is my handle. And I'm pretty now vocal on both. I wasn't on Twitter for a long time. I actually just got on Twitter heavy in December. So yeah.
I thought you've been giving them the flame.
She's been busting to the head ever since.
I know. Now I'm on Twitter more than I'm on Instagram. I used to be on Instagram a lot, and now I'm probably equally on both. Actually, I make
bird out.
Yeah.
Damn bird.
I like that. I like even that last housekeeping. Oh, I'm sorry. I was about to say I like even that little last tidbit that you said about making sure that you shine your light. I was telling them I compared it I think it was last week. I was telling y'all to that quote from Coach Carter, where he told them basically you had to shine your light to give others permission to shine their light. And I really feel like that's what we have to do in this movement to get people on track with the money.
Yep.
Yeah, sure.
Love it.
Sorry about that. My bad. Little tidbit. Y'all go ahead.
Hey, it's all good, bro. Well, yeah, Ms. Ayesha, we definitely thank you for hopping on the podcast with us. We're going to hop into a couple of housekeeping right before we dip. Thank everybody for listening to the Black Wealth Renaissance podcast week in, week out. We love and support everything y'all got going on. We love the support y'all be showing, the ratings, the reviews. Yeah. Just keep it coming. Share topics with us that you'd like to hear about, and just help us keep growing.
Yeah, and y'all definitely be safe through this time. Y'all be smart. Be smart with your money. If you get this $1,200, don't blow it. Don't go do nothing crazy with it. So y'all definitely just educate yourself. And most importantly, just get out and go do it. Don't be scared, man. Jared, Kelly, y'all got anything?
Keep rocking with us. Keep rate, subscribe. Make sure you subscribe to our YouTube. We're posting more content on there. Keep your lookout for new products that's coming out on BWR.
Yeah, definitely. Just make sure like Kelly said, be on the lookout for everything that's coming. And one big thing I really would appreciate if everybody just Google dollar cost averaging, because we said it a lot of times in the podcast, and I know they had told me about it. I ain't know what it was. I ain't gonna blame you. I ain't gonna be mean to you. Just go Google it, and you'll find out, because it's very important in this current economic times.
And if y'all don't understand it, we're gonna try to make a video about it. Damn it!
God dang it. Well, with that said, this is Black Wolf Renaissance signing out. Peace.
Hey, I got money on my mind. I'm just trying to get some dough. I ain't picking up my line.